Oh my God, Dogecoin to the house! Woo! Let's see what Sally got to say, bro.
Joe, your internet service is horribly slow. It's time to make a change.
Get Frontier fiber optic internet. That's 25 times faster.
Woo! We are flying, baby girls.
See the light. Switch to fiber. Frontier fiber optic internet.
Homeowners, this incredible tip is just for you. If you owe
Shut
less
your
than $331,760 on your home,
All right, Sagar, what's on your radar?
Well, I'm going to start with an apology. I'm sorry I have to keep covering this story. I'm sure some of you are even sick of hearing me talk about it, but as the media flails in the post-Trump age and new technology emerges that makes it possible to circumvent traditional power centers, we are going to see a vicious war between establishment powers and the last remaining areas of the internet, which are amenable to free thinking and free expression. As usual with these stories, it starts out with the New York Times. Funnily enough, even involves Taylor Lorenz, the lying journalist that we all got acquainted with last week. The Times story involves the new social media app Clubhouse, which is essentially a live audio discussion format. It's revolutionarily simple technology where some of the best discussions I've personally heard and even participated in are occurring right now. And as we've been covering in the last few weeks, this open and free-flowing set of discussions is anathema to the New York Times because they cannot control it. Lorenz has fired multiple shots at Clubhouse for basically refusing to bow to her and other tech journalists' attempts to police speech on the platform. But this one really takes the cake. The Times profile of Clubhouse's extraordinary rise was tweeted out from the Times with this tagline: "Unfettered conversations are taking place on Clubhouse, an invitation-only app that lets people gather in audio chat rooms." Oh my, unfettered. That sounds terrible. That line really does give away the entire game though, doesn't it? The Times is so up its own ass, it doesn't realize that it just gave away its central function in modern times, which is making sure all speech online is fettered. That's exactly what this entire episode is about. Attacking and framing Clubhouse as a dangerous hub of misinformation, which could be dangerous, meaning, well, of course, that people need to be protected and fact-check. Oh, who does the fact-checking? That's right, the New York Times offering itself up for service. Do you see how much of a scam this all is? It's blatant guild protectionism by the Times and its reporters who have a vested interest in making sure that they can use their brand to influence different businesses into doing what they want and is good for their bottom line. There's really no other way to look at what is going on here, and it's profoundly dangerous because the problem is it might work. Think about this. If you're an app like Clubhouse, you're out there trying to raise money and gin up excitement for your product. You have one of the most influential and thriving newspapers in the country telling some well-meaning people and subscribers there is rampant misinformation on your platform. Many people trust the New York Times, millions, and they have no reason to even doubt it. So when you actually examine these claims, they are total and complete bullshit. The misinformation claims from the fact that sometimes quacks on Clubhouse say the wrong things about the COVID vaccine. Okay, that literally happens everywhere. And guess what? In the instances where it did happen, people who were part of the discussions pushed back. And let's see what else is happening. An easy way to rectify it is to start your own discussion and refute each one of those points. That's it. Pretty easy, actually. We don't need the Times as an interlocutor to tell us to step in and tell us what's what. Or check out this paragraph from the Times. The growth has been accompanied by criticism that women and people of color are frequent targets of abuse, and that discussions involving anti-Semitism, homophobia, racism, and misogyny are on the rise. That makes it sound as if it's a hotbed of horror. Let me clue you in on something. When you have millions and millions of users, some of those are bad people. Some people, while interacting with strangers in particular, will get their feelings hurt. That's a bug of a free society and a free discussion. But my absolute favorite gripe within the Times story was this. And by the way, this is what the real gripe actually is. That some of the prominent users of the app preemptively blocked New York Times journalists, meaning they were not able to participate in some popular discussions on the app. Left unsaid that the person who's been blocked is Taylor Lorenz herself, the author of the piece, who is citing her personal beef as some evidence of a dispute that some people have with the app. On nearly every single one of their gripes with the app, nothing stands to scrutiny. All that remains is 2 harping reporters at the Times doing their best to pressure the app into doing what literally every single other Silicon Valley company has done. Bend the knee and institute fact-checking to the standards of the mainstream media. You and I both know where that leads, who the enforcers are, and how much worse that is for free expression. I will end with the same point that I made on Tuesday, which is the reason I'm obsessed with pushing back against this type of insanity, and I hope you all are too, is I already know where it leads, where content is taken down willy-nilly with no standards, where anything that the New York Times hates is mercilessly attacked until it is blocked or taken down by pliant social media companies. As the media begins to lose its easy ratings and dollars from the Trump era, they will focus all their power on this. The key part of a guild protecting itself is not for the good times, but the bad. And it's during the times that we're entering where they're going to flex every muscle they have to make sure they can destroy any area where people dare act freely. And I urge you all to stay vigilant, and if you can, score an invite, get on there, and participate now, so that if they do try and crack down, many of us will be waiting there to say,
It's time to throw away that dirty old dollar store sleep mask. It doesn't fully block out the light. It doesn't fit your face properly. It makes your face super sweaty. It falls apart after a few weeks of usage. Dr. Mara from the National Sleep Foundation found in a recent study that having 100% blackout when you sleep increases the length and quality of your sleep. This is called REM sleep. This means with 100% blackout, you will wake up more refreshed even after sleep.
The hell up with that stuff,
and that's
bruh.
what you can see, Crystal, quite clearly. I mean, you flagged.
Come on, Som, let's go up!
Economy online for Trump store under Biden has down by like 7/8 or something like that.
Yeah.
It's crazy. Like the amount of social media traffic and their bread and butter at the Times and more is dramatically down. And how are they going to urge people to buy subscriptions under Biden? You can't take out the big billboard in the middle of Times Square and be like, support truth and all of that. Nobody cares. People are moving on with their lives. So now they have to protect their monopoly on what is acceptable and what is not. And they're just leveraging all of their cultural and market power to do so. It has to be resisted at all costs.
So there's a lot there.
Yeah.
I mean, number one, I just want to say, if you cover Biden properly and you actually educate your audience on things that matter, then there's plenty to cover.
Oh,
and it's
but they're not going to do that.
But they're not, right. So I just want to be clear, the Biden administration actually is interesting and actually is significant, and there's a lot to talk about there unfolding in the Republican Party, unfolding in the Democratic Party, unfolding with their priorities, things that we cover on this show, but they don't know how to do that properly, and they haven't prepped their audience to care about policy, to care about the distinctions within the party,
Yes.
to care about actually holding Biden to account. So they're left, empty-handed. CNN writing stories about Biden's bedtime.
Literally.
Newsweek doing a whole write-up
Luigi.
on his exploits over the weekend, right? So that's one piece of it. But the other piece of this that's really the central part is, so after the January 6th Capitol riots, there was a whole crackdown on Parler, right? And not only is Parler taken down, but their Amazon pulled their web services.
They're effectively
huge
over.
outcry, right? And the allegation was Parler was central to planning and plotting these riots. Well, actually, if you analyze it, there was much more posting and much more organizing that was happening on Facebook.
Yes, Facebook.
So why didn't Facebook face the same level of backlash? Well, it's because they feel like they haven't done Facebook. They feel like they have somewhat of an ally there. They feel like Zuckerberg has done some of what they want. And so there aren't unfettered conversations happening on Facebook
Yes.
the way they're happening in these other spaces that they don't have control over. And so that's what the gripe is really about. And the fact that they used in that tweet the phrasing unfettered conversations are happening on Clubhouse, it just gives away the entire game. That's what they're terrified of, is having any sort of space that they can't control. And by the way, and we've talked about this before, but I think it's worth underscoring, the way that Clubhouse works, these are just audio-only conversations that are happening. It's not like Twitter or Facebook where things are getting shared and going viral, and then if
There's no
it's
such thing
wrong-
as virality there.
Exactly, yes.
Yeah.
And so if something is wrong, it's getting propagated, and then the fact check to try to clean it up is viewed by many less people. That's not a thing on Clubhouse. This is just a place for people to gather and have conversations.
True. Let's see what this guy got to say. Dumb game.
Your business strategy is designed intentionally to undermine market transparency and skim profits from companies and other investors. One problem, though, Mr. Griffin, is that we don't really know how central your firm has become to the capital markets. Mr. Griffin, does Citadel handle 47% of the U.S. listed retail volume? Please, yes or no?
Excuse me, Chairman Waters, what percentage is that?
47%.
So, Chairman Waters, to the best
Yes or no?
So, the odd, best of my knowledge, we handle in excess of roughly 40% of all retail volume.
Thank you
It's
very
away
much
the
for
entire
reclaiming my
game.
time.
That's what they're terrified
Mr. Griffin, on January 27, did Citadel execute 7.4 billion shares for retail investors, which would be more trades than the average daily volume of the entire United States equities market in 2019? Yes or no?
Chairman Waters, that was my written and oral.
Thank you very much. And with that, I now recognize the distinguished ranking member, Mr. McHenry, for 5 minutes for questions.
All right, thank you. Mr. Tanev, I'm going to come to you first. I just want to get to what happened on that day in January. So let's take a step back here. You get a call in the middle of the night, according to what I've heard you in interviews say. And based off that conversation with your compliance team, you decided to halt the buying of GameStop stock. People were furious. We'll get into the regulations and the settlement parts of that today. We will get to that. But this is what I think needs to be answered about your decision. Why did Robinhood restrict the buying but not the selling of GameStop? And why did folks get locked out on the buy side only?
Ranking Member McHenry, I appreciate the opportunity to address that. The reason that Robinhood, first of all, let me say Robinhood is always committed to providing access. It's in our name. It's in everything that we do. The decision to restrict GameStop and other securities was driven purely by deposit and collateral requirements imposed by our clearinghouses. So buying securities increases our collateral requirements.
Man, this guy's trying to kiss ass, bro. You know you were wrong. Just confess, bro.
Selling is a very difficult and painful experience where customers are unable to access their money. So
that is such a horse.
That type of experience on our customers.
That is such a
unless
lie.
We have no other choice. And even though I recognize customers were very upset and disappointed that we had to do this, I imagine it would have been significantly worse if we prevented customers from selling.
What?
Okay, so let me ask this question. Is payment for order flow legal?
Yes, payment for order flow is legal and regulated and a common industry.
And is this disclosed to those users of your app?
Yes, payment for order flow is disclosed in multiple places. And moreover, payment for order flow enables commission-free trading. And that's why it's become the industry standard model as other brokerages have replicated our model and started offering commission-free trading to their customers as well.
Okay. So to that, to this greater point of what happened that day and the model that you're using, let's be crystal clear. That decision you made to restrict the buying but not the selling of GameStop was based on pressure from anyone on the witness panel here today?
Not at all. Zero pressure from anyone. It was a collateral depository requirement decision made by our Robinhood Securities president.
All right. So let me get into this other question. Let me get into this question. You want to democratize finance. You want to open up Wall Street to retail investors. You say that Robinhood's mission is to democratize finance for all. So let's talk about that. So yes or no, can a Robinhood customer invest in Robinhood the company?
Robinhood's currently a private company, so that's not possible, no.
And So you mean to tell me that people that use your platform, that make you a successful company, and I would say directly contribute to your company's exponential growth and success, they don't get the same access to equity shares as a Robinhood employee or your institutional investors. Is that correct?
Currently, that is correct, yes.
All right, sure. Let me pivot to you. Why is that? Why is it that everyday investors on the Robinhood app, people that I would argue contribute to its success, can't invest in Robinhood itself?
The SEC limits a lot of investment in private companies to those folks that are known as accredited investors. And to become an accredited investor, you have to have meet a wealth test of earning at least $200,000 a year, or having a net worth of over $1 million. The vast majority of people in this country don't meet that standard and are unable to invest in most private companies.
Okay, so let me just clear this. Mr. Tenev, I don't blame you for the restriction you put on your customers not being able to invest in equity. I'd like to have more opportunity to ask Mr. Gill his thoughts on this, but let me just say this. I don't fault you for the inequitable regulatory structure that DC has created, but I think we need to clear this up. Final thing, Madam Chair, I have for the record, I'd like to submit a letter from the DTCC, which is the clearing company, that was not on the panel today, and your staff has this letter
Order.
All right, thank you all. We look forward to getting to the facts.
Other members, Ms. Maloney.
Chairwoman, and Ranking Member McKinley for convening this hearing. I hope today's hearing sheds light on how our markets are working, or in many cases are not working, for smaller investors and ways we can fix that. The events of late January saw tremendous volatility and stock prices that were totally divorced from market fundamentals. The whole enterprise was viewed by some as a giant video game, trading stocks instead of properties and monopoly money. But it's not all fun and games, because people can lose their life savings, hard-earned cash, and
For real, man. Hedge funds, man, they gotta take care of those guys, man. Those guys are snakes. Those guys being like reaping all their reward for themselves.
The actions of Robinhood and other trading platforms during the Gamestop frenzy caused confusion, anger, and undermined investor confidence in the fundamental fairness of our capital markets. None of this is healthy for our markets or good for investors. What makes markets work fairly is when everyone knows the rules and that the rules remain consistent and predictable and are enforced. But because of Robinhood's actions, too many customers did not get that predictability. Many retail investors woke up on January 28th to find that they could no longer buy and sell stocks the same way they could the days prior. And they were being treated differently than other market participants who could still buy and sell those same stocks. So I don't blame them for thinking that things were stacked against the little guy. Mr. Tenev, you stated in your testimony that Robinhood restricted trading for certain securities, including Gamestop, in order to meet your financial requirements with your clearinghouse. But when I go to Robinhood's website and the blog post you initially released on January 28th, your financial requirements with your clearinghouse are not mentioned. You only mention market volatility. And when I review the Robinhood customer agreement, you don't include specifics on how and when you may decide to restrict trading, which you did. And you don't include any language or disclosures regarding your capital requirements. It only includes vague language that at any time and in its sole discretion, Robinhood can restrict trading. In other words, you seem to reserve the right to make up the rules as you go along. So I have two questions for you. First,
Burn, bruh.
you owe your customers
Your fucking after hours, they're designed to rob from us. The only time Robinhood moves is after hours when we're not allowed to buy anything or sell. That's bullshit.
might have contributed to the wild speculation and confusion that resulted in the
Every broker should have the same fucking trading hours. Doesn't make sense.
Congresswoman, I appreciate the question. So to answer the second question, look, I'm sorry.
Oh, you're sorry?
I apologize, and I'm not gonna say that Robinhood did everything perfect and that we haven't made mistakes in the past.
Oh.
But what I commit to is making sure that we improve from this, we learn from it, and we don't make the same mistakes in the future. And Robinhood as an
I take that as you did that on purpose then.
and improve to make sure it doesn't happen again.
You took hedge funds side, bro, because you're getting paid by them.
Well, I expect we will experience future events with increased volatility, and Robinhood's recent actions appeared arbitrary, which is why I don't blame customers for feeling treated unfairly. Your trading restrictions came out of the blue, and your communication was not clear. So my next question, Mr. Tanev, looking forward, what operational changes is Robinhood making to better respond to future market volatility, to improve transparency with your customers, and to ensure retail customers don't get the rug pulled out from under them at the last minute?
Thank you for that question, Congresswoman. We'll be committing to reviewing absolutely everything about this. The $3.4 billion that we raised, I think, goes a long way to cushioning the firm from future market volatility and other similar black swan events. And
what they want is they want to have dibs for every fucking trading first. They get dibs, they start momentum, then they bring all the investors. We start buying in. Once they get their money, they short the stock. It's been happening, bro. The stock market is designed to rob from us. I wouldn't even do options no more. Long term, it's the only way to win against these freaking snakes.
Today, that's the late January market volatility that took place, along with what I hope is a broader discussion on market functions and their effect on everyday investors.
Damn, we went down.
Since I was very first elected, I have advocated for America's Main Street investors and worked tirelessly to ensure that all Americans, especially those low and middle income savers, are given the investment choice, access, and affordability that they deserve. Retail investors are the strength of our stock market, and I have fought throughout my career for their best interests in the financial markets, and this hearing today is no different. The advances in financial technology that we've witnessed in the last decade have improved the way that Americans and our businesses perform financial activities. In just the past year, we have seen retail investors' market participation more than double. And I think this is great. I believe in the wisdom of the retail investor, and I will say I believe in the First Amendment too. This increase is attributed to Robinhood and other trading brokerages who are lowering account minimums, permitting fractional share trading, and implementing zero commission trading. It's critical that Congress focus on reducing barriers to market participation, which is rarely want to do, let me sadly say, and allowing Main Street Americans access to the financial instruments that can create long-term investment savings. All of these changes have given millions of Americans the ability to invest better for their families and their future. My hope.
Hell yeah, it's my first time investing, yo. Man, I've made so much money in the stock market.
Once again,
People use research.
federal regulatory burdens
Long term
to
is
industry
the
that is
real winner,
already
though.
heavily regulated, that will prevent people from participating in our capital
I
markets.
had NEO. I had
Letting
3,000
insistent
shares of NEO when it was
regulations burden is
$5.
key,
I
not
sold
burdening
around
everyday
$7 or
investors with
$8,
new and
bro.
more costly barriers to
Then I
entry.
bought
Mr.
CCIV
It
today.
appears at the time your company did not have enough money to meet the collateral requirements for that level of trading by your customers. In your view, A, were collateral requirements from the DTCC unreasonably high? Was the amount of trading on your platform unforeseeable? Or was your company undercapitalized given its risk profile?
Thank you for the question, Congresswoman. So this event was a 5 Sigma event, which is a 1 in 3.5 million event. To put that in context, there have only been tens of thousands of stock market days in the history of the US stock market. So a 1 in 3.5 million event basically is unmodelable. That said, we can learn from it. And in this particular case, our risk management processes worked appropriately to keep us in compliance with all of our deposit requirements and collateral requirements.
Well, Mr. Tev, I realize that you are doing a full review of your practices and such. I encourage you to do that, and certainly communication with your investors is going to be key to that, because you didn't communicate with them early on. Let me just say, as the ranking member on the Diversity and Inclusion Subcommittee, I am delighted to be speaking with our witness, Ms. Jennifer Schulp. Ranking Member McHenry and I have spent countless hours stressing the importance of having qualified women in finance. So I'm pleased to have you here today to lend your expertise. Ms. Schulp, we now know that it was the daily collateral demands set by the National Security Clearing Corporation that were the reason Robinhood had to temporarily restrict trading. Can you briefly explain the purpose of these capital requirements and their overall relationship to ensuring our markets function in an orderly manner? And did you see any broad failures of market function during these events, ma'am?
Sure, thank you. Thank you for the compliment. The NSCC's collateral requirements here serve the function to provide security for the stock settlement process goes through. So while an investor thinks that what has happened is they bought a stock on the day that they make a trade, it really takes 2 days for the settlement process to clear. During that time, the brokerage firm, the DTCC, and the brokerage firm on the other side can remain at risk of that stock not actually clearing. And the collateral requirements are in place in order to mitigate the risk that the brokerage firm will not be able to make good on its promises to sell or buy. I didn't see any broad-scale failure. The DTCC's collateral requirement was large, but understandable. And I think things functioned largely.
Why is there echo?
My time has expired. I thank you all for your testimony, and I yield back, Madam Chairwoman.
Thank you,
Madam Chairman,
If you're using Robinhood, get your money out of Robinhood. Start putting it on Webull or E-Trade. Robinhood's gonna be broken, bro. I mean, they're an easy platform, but what they've done is just most likely they'll do the same thing in the future, bro.
Thank you very much. You heard Mr. Perlmutter. I would hope that every member would certainly.
Damn, look at those.
Mr. Sherman, you're recognized for 5 minutes.
Thank you very much. You've come to expect things on the internet to be free. When you're not paying for it, it's not free. Your profits, someone else is the customer. When you go onto Facebook and it's free, you're the product being sold to the advertiser, and your information is sold to God knows whom. So we now have a system where we're telling investors that it's free to invest to buy and sell stock. There are 2 ways to pay the folks involved in Wall Street for buying and selling stock. One is a commission, and you know what it is. And so we discourage investors a little bit from buying and selling stock because they have to pay a commission, and they know they're paying a commission. The other way to do it is to give them a worse execution. So whenever there's a stock being purchased and sold, the market maker, perhaps Citadel, might be willing to sell the stock for $10.05, but will buy it for only $10. The difference is 5 cents. And so the issue is whether Robinhood and other people who are being told you get it for free are really getting it for free. Mr. Griffin, you're a market maker. You pay some brokers for order flow. You don't pay other others for order flow. So when you pay for order flow, you're not making as much on the transaction. You have to pay some of that back to the broker. That's hidden for the amount of that is hidden from the customer. The fact that it exists has perhaps recently been disclosed. SEC rules require that people get the best execution, but I've recently learned that there's best execution and enhanced pricing. So if you get an order from Fidelity and you get an order from Robinhood and you're paying for the Robinhood order flow, is the Robinhood customer getting as good a price as the Fidelity customer? Mr. Griffin.
So, Congressman, I believe that's an excellent question. The execution quality that we can provide, as measured in terms of price improvement, is heavily related or correlated to the size of the order that we receive. So, if I were to speculate,
Don't tell me that that there are other factors involved and take us down another road. I'm asking you a clear question. Assuming same size of order, one comes in from Robinhood, one comes in from Fidelity. Is it not true that one is going to get a enhanced best execution, and the other one is just going to get best execution?
so as I was trying to explain, because the Robinhood order comes from a community of traders who tend to trade in smaller size.
That isn't my question, sir. You're evading my
Ooh.
question.
Ooh. Ooh.
Two identical orders.
Woo! Get him, bro.
Same quantity.
Get him. Yeah.
One for Fidelity.
Yeah.
What happens?
The quality of the execution varies by the channel of the order. This is a commonly understood phenomena in economics that channels matter. So, for example, when you go get a mortgage from JP Morgan to their clientele has a different rate of interest than a mortgage.
Okay, let me reclaiming my time, sir. Who gets the better deal? Well, one that comes from a broker who is being paid for order flow, and one not. Can you testify that on balance, there's no difference, assuming the same size of the order?
So, as I said earlier, size of the order is only one factor.
You are doing a great job of wasting my time. If you're going to filibuster, you should run for the Senate. Everyone else I've talked to in this industry says when you pay for order flow, when your broker is being paid for order flow, you get a worse execution. Otherwise, you're in a peculiar circumstance where you're making more money on a Fidelity transaction than a Robinhood transaction, which would be an absurd practice.
The gentleman's time has expired. Mr. Lucas, you're recognized for 5 minutes.
Thank you, Madam Chair. Thank you to the witnesses for agreeing to testify. It's been reported that approximately 20% of market volume is now attributable to retail customers, which I think is just fascinating considering that's up from 10% in 2019. And that's an overwhelmingly positive development. For more market liquidity, stability, additional avenues for households to grow their wealth. And it's important to increase market access for retail customers. And I don't want to disrupt that if we possibly can. So I'd like to turn with my first question to Mr. Tennant. Let's talk about the attention that this pay for order flow has received. You explained in your testimony Robinhood's relationship with market makers is important for Robinhood's ability to offer commission-free trading. So expand, if you would, on how that process benefits the everyday investor. And just expand in general on that, if you would.
Congressman, I'd be happy to. Thanks for giving me an opportunity. So, as I mentioned in my written testimony, payment for order flow enables commission-free trading. Prior to Robinhood changing the industry standard model to be commission-free, most brokers collected a commission on top of the payment for order flow on every transaction. Now, Robinhood routes to market makers, including Citadel Execution Services. We've got 7 in total across equities and options. And we route without consideration for payment for order flow. All payment for order flow arrangements are uniform across the market makers, and our system routes orders based on who provides the best execution quality for our customers. So the reason Citadel gets a relatively high percentage of our customer order flow is because they provide superior execution quality for our customers. And that's first and foremost the most important consideration that we look for. How are our customers getting the best execution quality? If another market maker were to improve upon the execution quality that Citadel Execution Services provides on any subset of orders, our system is set up to automatically route more traffic to that market maker.
Continuing down this line, because clearly this is one of the things that my colleagues and the public has a very strong interest in. And having lived through Dodd-Frank before, I see where sometimes major things can occur. I want to turn to Mr. Griffin. Now, could you also elaborate on how payment for order flow provides, whether it's the best price to the retail investor from the market maker perspective? Could you expand on that? As you outlined in...
Absolutely. So, as the CEO of Robinhood just set forth clearly, the orders that are allocated amongst the market makers today are allocated principally on the basis of pricing. We have fought for 15 years to make that the basis by how which orders are allocated, because we strongly believe that Citadel is able to provide a better execution for retail orders in the long run and make a huge investment in our team and our technology to do so. How is it that we are able to provide better execution for the exchanges? Because exchanges are limited in their ability to do business by regulatory mandate. Exchanges by law have a minimum 1 cent wide market, which for low price securities means that they are less competitive than they otherwise could be. We're able to
How are you here and what are you doing?
Excuse me?
That wasn't either one of us. Continue, Mr. Griffin.
All right. So we're able to share our trading acumen with retail investors, and we're able to give them a better price, and we're able to make payments for order flow to firms like Robinhood that allow them to have lower, or today in most cases, no commission. And of particular note, we're able to help Robinhood and other brokers pay exchange fees to the exchanges at the time of execution. This has been very important to the democratization of finance. It has allowed the American retail investor to have the lowest execution cost they've ever had in the history of the U.S. financial market.
In the Dodd-Frank process that the chairman and I went through a decade ago, plus there was much discussion about margin requirements. Give us just a discussion for an instant about when you discovered you had a $3 billion additional margin call.
$3 billion margin call.
I believe the full play-by-play of that situation was described in detail in my written testimony. Just to clarify,
Oh, Jamal with the like, bro. Thank you.
Thank you, Madam Chair. I yield back.
Has expired. Mr. Meeks, you're recognized for 5 minutes.
Thank you, Madam Chair, for this hearing, and Mr. Rankin.
Is everything halted? IMC going up.
Let me ask a question to Mr. Tlaib. I've been burnt once or twice in the market, and but particularly since I've been a member of Congress, one of the things that I recall greatly was the financial crises in 2008.
Sundial. How much I'm down here? So.
It is, we thought that opening the market up, where people had adjustable rate mortgages, etc., they were able to get into the market, people who may not have been before, but a lot of disclosure had not happened. So they didn't look, nor there was no documents to look at what their incomes were or anything of that nature. So when those adjustable rates happened, many individuals lost their homes. Many people who bought those mortgages, or who initially agreed to those mortgages, sold them immediately because they did know that the people would not be able to afford them and they would default shortly thereafter. Now, so I understand your model of trying to get more people, more democratization, but that means that there's now greater responsibility of ensuring that your customers have all the information they need to assess riskier trades. Now, for me, the information that has to be digestible and accessible. Now, one of the problems I have, for example, you're allowing up to $1,000 to buy stocks on margin, and borrowing on margin is risky. So, how do you disclose this? How do you make determination of individuals who are not the sophisticated investors and allowing them to buy these risky stocks that are on margin?
Thank you, Congressman, for the opportunity to address that. Let me set the stage a little bit by saying that about 2% of our customers borrow on margin. About 13% on a monthly basis perform an options transaction, and a much smaller number, around 3%, perform a multi-leg options transaction. So the vast majority of our customers are engaging in buy and hold activities and long-term investing on our platform. Now, to clarify your point on the $1,000 margin, that's actually something that we refer to as Robinhood Instant, and it's provided as a courtesy. When a customer initiates a deposit, we allow them access to up to $1,000 of that deposit immediately, similar to how if you deposit a check at a bank, as a courtesy, they might provide access to those.
See, I didn't know that instant deposit was as margin.
As for margin specifically, borrowing money on margin, the rules are very ironclad industry-wide. Obviously, Robinhood Securities conforms to all the applicable rules, and Robinhood's product is in many ways more restrictive than that of our competitors, because in order to even qualify for borrowing on margin, you have to be a Robinhood Gold customer, which involves paying $5 a month for the service.
So I think that you say that everything is restrictive, but when you are going after the less sophisticated investors, it's more than that. There's a greater responsibility that you have because they have, they could lose, and when they lose, it could make a determination of whether or not they can pay their mortgage or their rent or not. And they can be taken advantage of. Oftentimes you find in the financial industry, it is those that have the least that are really taken advantage of. So the big guys, it becomes a reverse Robin Hood situation, which really concerns me. Let me get to this real quick because there was just something else that you said in regards to liquidity. And you said that you didn't borrow the money because you needed it at the time, but that then you later in a question you asked that you raised the additional money because I want to know how you spent the money for future situations, which means to me that you did have a liquidity problem, or
Everything halted, huh?
possibly
What is
have
going
a
on?
liquidity problem, or would have one in future transactions. Could you? What's the deal there?
I appreciate that question. I stand by what I said. Robinhood was able to meet our deposit requirements. We were in compliance with firm net capital obligations throughout the period. And that additional capital, the $3.4 billion, wasn't to service our requirements. It was entirely to prepare for a future, even greater black swan event, and to unrestrict and remove restrictions on the trading and buying of these securities.
The gentleman's time has expired. Mr. Huizenga, you're next with 5 minutes.
Thank you, Madam Chair. And this would have been a little nicer 10 minutes ago when I was supposed to go, but I'm going to go back to Mr. Griffin and the Capital Markets Subcommittee. Ranking member, I think, was filibustering himself, and I just wanted to make sure, Mr. Griffin, you had that opportunity to feel comfortable with the explanation of that BestX execution and what was attempted apparently to try to be asked.
Congressman, I hope so. I think it's important to emphasize that we have vigorously advocated for execution quality to be one of the dominant decision-making factors throughout the order flow of the United States. This has saved retail investors billions of dollars over the year, in contrast to the executions that they would receive through other execution strategies.
Okay.
With respect to payment for order flow, we simply play by the rules of the road. Payment for order flow has been expressly approved.
Is he reading? Is he reading off it? He looks like he's reading.
If they choose to change the rules of the road, we need to drive on the left side versus the right side. That's fine with us. I do believe that payment for order flow has been an important source of innovation.
That's a scripted.
As the CEO Robin,
I don't know. I'm not sure if people are allowed to do that or because mostly it's like pre-planned what they're about to say already. So you know what I'm saying?
Skull from Cato Institute, and I know that there was a Greenwich Associates had a study, and others are out there. Do you concur that this has been good for consumers in the most part?
I think that there's still ongoing studies, but I do think that payment for order flow and the price improvements have largely been good for improvements for customers. And I agree with Mr. Griffin that this has helped drive innovation in the industry. I think disclosure can always be better, and I think people should understand that their broker still needs to make money even if they're providing a zero commission trading service.
Yeah. Okay. All right. I've got about 3 minutes left. I was going to start actually with this and ask each one of you why you thought you were here today. But I'm going to dispense with that because it's going to take too much time, and I'll provide the answer. Political theater, for the most part. That's what this hearing is today. I mean, we're on the business channels right now and on C-SPAN. I think if you see a few of my colleagues playing to the cameras. But we need to have some of these fundamental and important questions answered at the end of the day. And one of the assertions that you've heard already today is that investing is, quote, casino gambling. It's using monopoly funny money. I guess I want to know, is individual retail participation in the marketplace gambling, casino gambling, or using funny money? Mr. Gill, why don't we just start with you? Very quickly. I don't hear him. Mr. Huffman, let's move to you.
No, I believe that investing is investing.
Okay. Mr. Griffin?
The vast majority of retail participation are people saving to meet their dreams.
All right. Mr. Tanev?
Congressman, thank you. As I mentioned in my opening statement, Robinhood customers have essentially made over $35 billion in unrealized and realized gains on all of their assets.
It's thing for them, correct?
Absolutely, it's investing and it's building wealth.
Go back to Mr. Gill.
Yes, of course. I do. I believe it's an opportunity for investors to participate in the market just as institutionals participate.
Okay, so actually the business channels had a good question from one of the Reddit readers, which is, so you recommended GameStop before. Would you buy their stock now at roughly 45? It started at 48 earlier today. You were talking about buying it and being happy when it hit cross 20. So are you buying that stock today?
Well, let me just say that investing can be risky, and my particular approach to investing is rather aggressive and may not be suitable for anyone else. But for me personally, yes.
Damn, this boy went ham.
Personally, yes, I do find it's an attractive.
Hey man, he has the right narrative. He'll use the right wordings, bro. If you use the right wordings when it comes to this, he has so much leverage over these fools.
Payment for order flow. That's one of the accusations. Bought into this because they don't know that.
Sorry, could you repeat that question?
Did you buy GameStop because you were not aware of the payment for order flow?
My investment in GameStop was based on the fundamentals.
Okay, I think that answers it. I believe my time has expired.
Ms. Velasquez, you're recognized for 5 minutes.
Thank you, Chairwoman. Mr. Tenet,
Robinhood seems to have perfected the gamification of trading, providing the user with the perception that investing through the Robinhood app offers recreational gain, playing with little or no downside risk. Of course, many of us understand that investing is not a game and carries significant risk. How does
The game has
Robinhood
changed,
balance
old lady.
disclosures
You is a
around
boomer,
the
you don't get
potential
it.
downside risk of investing,
We have the
including the
technology in our
risk
hands
of
now to
substantial
freaking invest.
loss,
But
and the
we
more
dictate now who gets to
enticing
have
claims
dibs, not you
of
guys. Not
profitability
hedge fund, not
and
the
the ease of
rich
trading?
bastards that have been profiting, that have been reaping all the rewards, bro. That should be like given to everyone equally. Not just like the 5%. They don't do anything for the country.
We know that investing is serious.
Rich people do not do anything for the country, bro. It's all the essential
All of the
workers.
educational tools and
Veterans.
support
All of them.
to help people on the
Like
investment
doctors.
journey. What
But
we see is
we have a corrupted system, bro. Where greed and power dictates.
are trading options.
That's why you see so many fucking homeless people that
Less than 3% borrow.
can't afford anything no more.
So most people use Robinhood to build up portfolios over time. And
But can you answer my question? How do you balance disclosures around the potential downside risk of
so we make lots of disclosures, Congresswoman.
Lots.
We're also a self-directed brokerage, so that means we don't provide advice and we don't make recommendations for what customers should or should not invest in.
So you don't think that as a result of the emphasizing profitability and ease of trading over the risk of loss, that many investors, amateur investors, were unaware of the situation they currently find themselves in?
Well, I want to mention again, as in my opening statement, Robinhood customers have earned more than $35 billion in unrealized and realized gains on top of what they've deposited. So I think this shows us that the product is working for customers and our mission is working.
What up, Dylan?
Thank you. Mr. Talking, over the course of my time in Congress, I have been concerned and spoken out about the dangers of short selling. While I understand that short selling can be used for legitimate purposes, too often I have seen abuse, and it ends up harming ordinary workers and families. I first saw it against the people of Puerto Rico, and now we are seeing it here against Gamestop. Large investors, including hedge funds like yours, have to disclose their long positions when they own 5% or more of the company's shares, but not such disclosure is required for short positions. As we consider reforms, is this type of disclosure for short positions something you will support? Mr. Plotkin?
Yeah, Congresswoman, thank you very much for the question. I think it's a really good question. Whatever regulation is put forth in the marketplace, we will obviously, operate within those rules. It's certainly something I'd be happy to follow up with.
But what about my question about short selling?
Yeah, I think it's a really good question. It's not for me to decide, but if those are the rules, I'll certainly abide by them.
Okay, well, I'm glad to hear that answer. Mr. Deal, public reports credit you with helping to start the GameStop craze by encouraging other amateur investors to bet against the short positions that Mr. Plotkin and others took. But the stock has now fallen from its high, and many amateur investors have lost hundreds of thousands of dollars. It is my understanding that you are a registered broker. Is that correct?
The gentle lady's time has expired.
Thank you. I yield back.
Thank you, and I appreciate all of the members who are participating today. This is not political theater at all. This is serious oversight responsibility, and members are reminded not to impugn the motive of other members. Thank you, Mr. Lukemeyer. You're recognized for 5 minutes.
Thank you, Madam Chair. And my first question would go to Mr. Gill. Mr. Gill, I guess the question is, you're a very serious investor, somebody who does his homework, invest in the market, your own personal funds. And so I guess the question would be, here today we're discussing the actions around Robinhood, all the transactions that took place. And I guess, do you think we need more legislation as a result of what happened here, or did the system actually work? And let me just make a couple comments on that part. From the standpoint that did it work, was it self-correcting? Did the fact that somebody like yourself was able to invest and maybe take advantage of the over-shorting positions by the hedge fund guys who were trying to really drive down the price of the stock for other reasons, whatever, or did it point out perhaps that we had some companies, perhaps like Robinhood, I would argue that was undercapitalized or under-reserved, or maybe there was over-aggressive other types of investing that was taking place, the algorithms that were there, the different business models, they didn't work because you outsmarted the system, so to speak. Would you like to comment on that sort of questions and how I formatted that?
Thank you for the question, Congressman. I would say my expertise is in analyzing the business, the fundamentals of the business, not so much on the inner workings of the market. I'm not so sure about legislation per se. What I would say is that increased transparency could help. That if someone like me could have a better understanding of how those types of things work, I feel as though it would be quite beneficial to retail investors.
Thank you for that. I know that Mr. Tevin, Robinhood has an interesting name. As I recall, the old story is take from the rich, give to the poor. And I assume what you're doing is allowing the poor to compete with the rich, which is interesting. You made the comment in your testimony, Mr. Tevin, about settling this in real time. We have the electronic ability to do this. I think that would probably help the situation that occurred here. But what other problems occur when you do this in real time? What other things would we have to look at? What other unintended consequences would there be if you did something like that?
Thank you, Congressman, for the question. I believe that right now, certain market participants rely on next day settlement to be able to take advantage of intraday netting and run up larger one-sided positions in certain stocks with the knowledge that they can close those positions or reduce them by the time settlement happens. And I understand that would be a limitation to the trading activities of some of these institutions. So that's certainly one area to consider. The other is around securities lending. We'd have to make changes to how securities lending works. I don't think any of these are insurmountable challenges, and I'd be happy, as I mentioned earlier, to deploy our intellectual capital and our team's engineering resources to help solve these problems very quickly.
Thank you for that. Mr. Plotkin and Mr. Griffin, the question is for both of you here. Whenever you're short selling, I understand that GameStop stock was short sold 140%. And Mr. Plotkin, you made the comment in your testimony a minute ago that you were not trying to manipulate stock. Yet, if you're short selling a stock 140%, for me, on the outside looking in, it looks like that's exactly what you're doing. Explain to me why that's not manipulating a stock.
Thank you, Congressman. For us, I can't speak to other people that were shorted. Anytime we short a stock, we locate a borrow. Our systems actually force us to find a borrower, so we always, short stocks within the context of all the rules.
Mr. Griffin, would you like to comment on that? You guys are both market makers and brokers and hedge fund guys. I mean, you do all of it. Why is this not considered manipulating a stock whenever you can short sell at 140%? Don't you think there should be a limit on something like that?
So I believe that the short interest in GameStop was exceptional, and I'm not sure it's worth us delving into legislative corrections for a very unique situation in terms of the extreme size of the short interest. I will say that all of the large market participants, in fact, every bank, every hedge fund does have to comply with the requirement to borrow shares to short shares in the course of their day in and day out business. The practice of naked shorting was largely curtailed by SEC mandate years ago.
The gentleman's time has expired. Mr. Scott, you're recognized for 5 minutes.
Thank you, Chair Lady Waters. And let me just say, Chair Lady, that the people of this country appreciate you for pulling this financial services hearing together, because this is a threat to the future of our financial system, and we got to get to the bottom of it. Let me start with you, Mr. Tenney. Let's go through this. The sequence of events that led to the extreme rise in value of GameStop stock and the subsequent market volatility originated through a Reddit discussion. And then that was fueled through social media. And as the story gained traction, tweets by well-known figures with the influence to move markets sent the stock value even higher and higher. So let me start with you, Mr. Tenney. What policies does Robinhood have in place to monitor what happened on social media and how it drives the use of your trading platforms?
Thank you for the question, Congressman. Currently, Robinhood does not perform any sort of moderation of social media. We simply don't have the data that the social media platforms have at their disposal to tie these posts to identities. We do, however, within Robinhood Securities, conform to all regulatory requirements around monitoring and trade surveillance and all things of that nature.
Well, Mr. Kennedy, don't you see something is gone terribly wrong here? What do you do to monitor the trades in individual stocks, particularly when, in the case of GameStop, they are singled out and moved on social media? What do you do?
I appreciate the question. So our priority throughout the exceptional market conditions in January and early February was to maintain the uptime and performance of our platform and make sure that we're available to customers.
Let me try to get to a point here. Do you, Robinhood, do you have any policies in place to ensure that investors are making trades based on legitimate material, financial information, and not the influence of social media, the design of trading platforms, or any other superfluous information? Do you have anything, any guard to that?
Absolutely. Congressman, we provide educational resources to our customers, including our redesigned Robinhood Learn portal, which is not just available to Robinhood customers, but to the general public, and had over 3.2 million people visiting in 2020.
But do we not, I mean, you're at the center of this. Don't you see and agree that something very wrong happened here and that you're at the center of it? And we are looking on this committee of how we can protect our wonderful, precious financial system. We need it from you. What about you, Mr. Hoffman? Do you have anything? What steps is your company taking to guard against this? Anything at all?
Congressman, we spend a lot of time at Reddit ensuring the authenticity of our platform. So we've got a large team dedicated to this exact task. everything on Reddit, all of the content is created by users, voted on by users, and ranked by users. And we make sure that that is authentic and as unmanipulated as possible. And in this specific case, we did not see any signs of manipulation.
Madam Chairman, lady, I just want to conclude. I got maybe 10 seconds left, but this episode exposes a serious threat to our financial system when tweets, social media posts do more to move the market than material, legitimate information. The risk is enormous.
Thank you very much. Mr. Stivers, you now have 5 minutes.
Thank you, Madam Chair. I appreciate you calling this hearing. The American financial markets, I believe, are the envy of the world, but they're still imperfect. I would have liked to seen this committee have a meaningful discussion about capital requirements and the T+2 clearing rules that may have contributed to some of Robinhood's customers not being able to purchase stock, including GameStop, for a period of time. But because the majority didn't include the SEC, the Depository Trust Clearing Corporation, or the National Securities Clearing Corporation to testify, we're left with what we have. That's because I believe the majority is attempting to use this hearing to drive a narrative about the U.S. capital markets being rigged. But I do have several questions. Mr. Tanev, you decided to stop allowing your users to buy GameStop and other stocks as a result of capital requirements on Robinhood Securities. Is that correct?
That's correct, yes. Deposit requirements with our clearing houses.
And you know, those got resolved, but for a period of time, some of your users could only sell and not buy, and that could have contributed to the stock actually going, you know, not going up as fast because some of your users were prohibited from buying. Do you think that is possible that could have happened?
I shouldn't speculate on what could have happened if
there's more sellers than buyers, does the stock price go down or up?
Well, to be clear, Robinhood, Congressman, is a minority of trading activity in these securities.
I understand, but if your buyers can only sell and not buy, then it clearly keeps you from putting upward pressure on the stock price. Is that correct?
On Thursday, customers on our platform could only sell, so there was no ability to buy. That's correct.
Great. So, you know, I know, and you said earlier, by the way, I know some people have attacked your arbitration agreements, but I want you to be clear. If your users were harmed as a result of these actions, they can recover through arbitration. Is that correct? Yes or no?
Yes, that's correct. And our arbitration is FINRA supervised and overseen. And we do believe arbitration gives customers a fair and speedier resolution to their claims.
Thank you. Does your user agreement and your arbitration allow for group arbitration or only individual arbitration?
Let me get back to you on that.
If a group was treated similarly and similarly affected or lost upside or lost money, can they do it as a group, or is it only individual in your arbitration agreement?
Well, Congressman, I'm sure you're familiar of the number of class action lawsuits filed against Robinhood.
And I'm not asking about a class action lawsuit. I'm asking, in your arbitration system, can a group of people come together, or as an individual? And this is not a trick question. I'm not a fan of trial lawyers. I'm just trying to understand.
Yeah, I appreciate the question, Congressman. I think the best thing I can do is get back to you after making sure that we get you the right answer.
Thank you. That'd be helpful. Mr. Plotkin, are you a frequent short seller, yes or no?
We run a long short portfolio. The majority of our investments are long investments, but we also have short investments to hedge out market risk.
Thank you, Mr. Plotkin. Has Melvin Capital ever engaged in short selling of the stock Tesla?
We have been short Tesla in the past. That's correct.
Mr. Plotkin, also, this is a longer question. Did you see the tweet from Tesla CEO Elon Musk about GameStop stock?
I did see that after market hours on a Tuesday.
Do you believe that Mr. Musk's tweet had any significant
effect of driving the rise in GameStop stock?
I don't want to speculate on what the actions of his tweet were. The stock did rise
Let me ask
after.
you this, then do you believe that that tweet was targeting you because you had shorted Tesla stock in the past?
You know, we had a very small short position years ago in Tesla. That would be pure speculation as to his motives of putting that tweet out.
Okay, thank you. I'll go back to Mr. Tanev on the regulatory requirements. Do you believe that the SEC and the Depository Trust Clearing Corporation should modify any of their rules as a result of what happened to your users because of capital requirements?
I do believe
The gentleman's time has expired, and the SEC is not here today because they're in transition with a temporary chair, awaiting the confirmation of the person who's been appointed by the President of the United States. This is a serious hearing. Members are reminded not to impugn the motives of others. Thank you, Mr. Green. You're recognized for 5 minutes.
Thank you, Madam Chair. Ms. Schultz, there is a reason for penalizing a market maker for improperly trading its own accounts ahead of its clients' accounts. Note that I said improperly trading. I don't want to go through the scenario of there being a time for proper trading ahead of accounts. I'd like for you to tell us what that reason is, please.
What trading ahead of customer accounts is illegal, and it does not.
I understand that it's illegal. Yeah. I don't mean to be rude, crude, and unrefined, but I have to ask this question quickly. What can happen that can benefit the market maker? How can that be monetized such that the market maker profits greatly from doing it?
Right. If a market maker trades improperly ahead of the own customer accounts, he can get a better price and can move the market in the process depending on how big the trade is, thus hurting the customer.
Yes, and if this trade is huge and you can see that this trade that the client has is huge and will have an impact on the market, how does that benefit the market maker to trade ahead of the client?
The market maker can get a better price for himself before the price changes by the client's trade. He can also engage in self-dealing that way as well.
Yeah. So does it benefit a huge market maker to have a great deal with, let's say, a Robinhood because of the flow that will be coming through that the market maker can take advantage of?
I don't think that they're necessarily congruent situations. When you're trading ahead of a customer order, which is something that is illegal and that the SEC does monitor for, it's very different from having knowledge as to the way that the market might be moving based on.
I understand, but I want to talk about the circumstance where it's improper, not where it's proper. Remember, we started with improper trading. Here's my point. Let me go to it quickly. The market maker Citadel traded over-the-counter stocks for its own accounts in 2012, from 2012 to 2014, while simultaneously delaying client orders for the same shares. And it was fine for this. Citadel has been naughty for some time. 2014, Citadel faced $800,000 in penalties. 2017, 22.6 million. 2018, 3.5 million. 2020, 97 million. And another 2020 of 700,000. This seems like a lot of money. It is for me, more than $124 million. But over the same period of time, Citadel had revenues generated in the amount of $13.2 billion. It seems to me that the punishment for these improper trades and improper actions, because it wasn't just trading, Citadel also did some other things that were not proper. They misled clients. Seems that the punishment is so small given the amount of revenue generated over the same period of time. It seems that Citadel has at least an opportunity to build into its cost of doing business paying penalties. And that concerns me. It concerns me that the punishment doesn't seem to deter Citadel. It concerns me because I know of circumstances where in persons who are not in the market, they do things that are much less harmful, and they can possibly go to jail. So the question that I have is this: what kinds of systems do we have in place? And it's back to you again, ma'am, to prevent the very things that I have called to the attention of my colleagues.
Well, as a former enforcement attorney at FINRA, I can say that regulators have the same concern with fines and other punishments becoming just a cost of doing business. And it's one of the things that are considered along with the regulations around what can be punished.
The gentleman's time
May I, for the record,
has expired. Mr. Green, as you know, we're going to have a series of hearings, and our next panel will include a whole bevy of experts also on some of these issues. With that, Mr. Barr, you're ready.
May I play something in the record, please? I have additional questions.
Without objection, you may enter into the record. Thank you.
Thank you.
Mr. Barr, you're recognized for 5 minutes.
Thank you, Madam Chair. And Mr. Griffin, I want to revisit this issue of payment for order flow. Payment for order flow has been around for decades, correct?
So I know it's been around for at least 1 or 2 decades. I can't answer before that period of time.
And it's a recognized and approved practice by the SEC, correct?
Yes, it is.
And payment for order flow is set by the brokerage firm, not the wholesaler, right?
It is ultimately a negotiated number, but it is a number that is set by the brokerage firm and not by us as the market maker.
Well, as a market maker that provides execution services to retail brokers, you are required to meet best execution requirements. Is that correct?
Yes, it is.
And in other words, market makers are required to provide the same or better pricing than the exchanges, correct?
That is correct.
And how can market makers offer that better pricing to Mr. Sherman's line of questions?
So there are a number of drivers that permit us to offer better pricing than what is available on exchange. The first is that exchanges have legally mandated minimum tick sizes of a penny. So if you look at a stock like AMC, it trades $5 bid, 501 offered. If the exchange could trade with a half-cent increment, it would probably trade $5.005 bid, 501 offered, or vice versa. But the exchanges are limited to a 1 cent minimum tick size. And we have been clear on the record in prior testimony that exchanges should be permitted to have a smaller and more competitive tick size. That's factor number one.
Okay.
Number two is that the average retail order is much smaller in totality than the average order that goes onto an exchange. Because this order is smaller, and I'll share a number with you, the typical Robinhood order is ballpark about $2,000 in size. Because it's a small order, the amount of risk that we need to assume in managing that order is relatively small as compared to an order that we have to manage from our on-exchange trading. And as I'm sure you're well aware, we are the largest trader of stocks on exchanges in the United States.
So let me move to Mr. Tenev really quickly on that point. What impact might greater restrictions on the payment for order flow model have on your ability to offer zero commission trades?
We do believe, Congressman, that that's an important question, and payment for order flow helps cover the costs of running our business and offer commission-free trading to customers. When we started, people didn't even think that there was enough margin left to make this business work, but we've been fortunate to make it work and to make it work for our customers.
Well, let's talk about why Robinhood restricted trades. I think your explanation about margin requirements charged by your clearinghouse makes sense. Is your clearinghouse supervised by the Fed and the SEC?
I believe that's the
Are the margin requirements charged by your clearinghouse in turn approved by federal regulators?
Yes.
And did federal regulators approve the value at risk charge that was imposed on Robinhood?
I believe, Congressman, the value at risk charge is outlined in general terms in Dodd-Frank, but I'm not sure who approved the specific implementation.
If he doesn't know that, they're robbing us.
So if anyone has a problem with your decision to halt trades, it's fair to say that their frustration should be directed toward federal regulation.
Congressman, I'm not trying to throw anyone under the bus and direct frustration anywhere. All I can say is Robinhood Securities played this by the books and played it basically the only way that we could remain in compliance with our deposit requirements.
Mr. Plotkin, I appreciate your testimony that Melvin always follows laws governing shorting stock, but Melvin lost $6 billion in 20 trading days. Let me ask you about your risk management. Did your short positions exceed float?
No, they did not.
Well, shorting has an important role to play in our markets, allowing for legitimate hedging and price discovery. But we are interested in naked shorting, and so we would hope that you would clarify that and how it is that you make sure that you're first locating the borrow.
My time has expired. Mr. Cleaver, you're recognized for 5 minutes.
Thank you, Madam Chair. And I too would like to thank you for this hearing. It's a question that a lot of people are asking, probably many of us as we go through our districts. But let me start with you, Mr. Tlaib. I'm just curious if you can give it to me in a short period of time. How did you come up with your name for your company?
Absolutely. Thank you for that question, Congressman. Robinhood stands for lowering the barrier to entry and democratizing finance for all. So the idea is the same tools that institutions and wealthier, high net worth individuals have had for a long time should be available to the people regardless of their net worth or how much money they have.
Okay, I appreciate that answer. Because it's something I would also embrace. However, I have a 23-year-old on the other side of the house who I love dearly, but he has no training, no income, no qualifications. How in the world could he get like $1 million worth of leverage?
Thank you, Congressman. So the leverage that we provide to our customers, which less than 3% of our customers actively use, is regulated strictly by requirements. So the only way to get that amount of leverage in a margin account through borrowing is to deposit a similarly sized amount of capital.
Or by mistake.
Congressman, I'm not sure what you're referring to.
Well, I mean, there's a record of a young man getting $1 million worth of leverage. He was only 20 years old. So I'm just saying.
Yo, this is tripping, man. Robinhood's like screwing everybody up. I get it. The new investors, let's say.
I appreciate the opportunity to address that really important point. You're referring to Mr. Kearns.
I am.
The man who unfortunately passed last year. first of all, I'm sorry to the family of Mr.
Oh, that was that kid that took his own life, bro, because of my 700,000. That shit was tripping, bro. My first auction too, I was tripping. Holy shit.
To the entire company, and we vowed to take a series of steps, very aggressive steps, to make our options product safer for our customers, including changing the customer interface, adding more additional options.
No, you should put how much they're gonna be losing, the total amount, like the collateral and all that shit.
People getting options, and adding a live customer support line for acute options cases. So it was a tragedy, and we went into immediate action to make sure that we made not just the most accessible options trading product for our customers, but the safest as well.
All right.
Okay, I asked that question.
All right.
In my real life, I'm a United Methodist pastor, and so I've read your statement. After the tragedy of this young 20-year-old, but I mean, and I don't think you nor I want to get in. I mean, to litigate that right here today. But what improvements did you make in the aftermath to your platform, or were there improvements?
Thank you, Congressman. There were several improvements. One, we added the ability to instant exercise as well as exercise options positions in-app. We clarified the display of buying power, specifically negative buying power, in situations where one leg of a complex multi-leg options transaction were to be assigned. We also added an options education specialist. We also added live phone-based customer support for acute options cases, which has gotten very, very great feedback from customers and is something we're expanding to other use cases, such as cases where customers' accounts have had off-platform hacking incidents.
Okay, that's the last one is where I was concentrating on, because this young man was trying to get into your system to find out what was going on. He was confused. He was scared, and so he sent emails. And so to be fair, there was a response, but it was like hours later. And so as I became more and more familiar with this particular case,
The gentleman's time has expired.
Thank you, Madam. Thank you, Madam Chair. I appreciate it.
You're so welcome. Mr. Hill, you're recognized for 5 minutes.
Well, thank you, Madam Chair, for holding this hearing, and I want to thank our witnesses for their expertise and their patience. Madam Chair, I have a letter from the American Securities Association I'd like to insert in the record.
Without objection, such is the order.
Thank you very much, and Mr. Tenev, what a treat to see you, and congratulations on being part of the American dream. I had the pleasure working for President Bush 41, of working in Sofia in 1990 and 1991 to try to bring capitalism to Bulgaria after the wall fell. So I'm glad to see you're an American citizen innovating here in our country.
Thank you.
I think you've done a good job talking about I'd say the acknowledged lesson that you've learned in terms of these deposits for clearing and the important risk management issue for your firm. So I'd like to turn to follow up on some of the discussions about retail service that you've also touched on today. Do you have a call center generally for Robinhood investors?
Thank you for that question, Congressman. And I want to start by saying customer service is fundamental to everything that we do, and it's one of the areas where we're investing the most. We have customer service centers in a number of states: Colorado, Florida, Texas, and Arizona, and we're looking to expand aggressively.
Do you have a call center that I can call, a 1-800 number, if I'm having a trouble in the middle of the trading day?
We do offer, Congressman, live phone support in-app for certain use cases. We're expanding that as fast as we can. Yeah. So as I mentioned earlier, options, advanced options cases, as well as account takeovers, which typically happen through a customer's email, personal email, who's been compromised. and the feedback's been great, and we're looking to expand the live phone channel as well as make improvements to our email channel and even upstream within the product.
Thank you. That's helpful. And on the subject of margin and options, you talked about that today. But I've spent 40 years in this business and been the general securities principal in 3 different firms. And this issue of granting margin and option approval to retail clients is always an important issue. You've addressed that today, so I want to turn to a different topic that has not been raised, and that's low dollar stocks. As I understand it, your policy and procedure manual simply said that you allow low dollar stocks if they're on an exchange, but many brokerage firms are very reticent to allow retail investors to invest in stocks that are under $5. Could you address that issue today?
Yes, I'd be happy to, Congressman. So Robinhood allows customers to trade in and invest in exchange-listed securities. So that's the objective criteria that we use. And it actually excludes several types of securities that customers commonly request to trade in. So on Robinhood, you can't trade over-the-counter bulletin boards, except in limited cases where a listed stock falls to over-the-counter. You can't trade pink sheets. And of course, you can't short sell or enter undefined risk options trades.
Okay.
So our objective criteria involve whether exchanges list these securities.
Thank you, and I think that probably, I'm sure you'll reevaluate that after these effects. Let me turn to Ms. Schulp. Thank you for being here. The Wall Street Bets Reddit platform. I'm curious, when you think about the obligation of this SEC pending investigation, based on your FINRA background, do you think the SEC should look at the bulletin board participants under Section 9A2 on potentially inducing trading in a certain direction? Is that worthy of their review?
Thank you for the question, Congressman. I think that there's been little evidence to this time that there's been any sort of false or deceptive conduct taking place on the Wall Street Bets Forum. That does not mean, though, that I think that the SEC should.
All right, smoke time. I'll be back, guys.
Because of the anonymity in the forum, there could have been people that were engaging in deceptive behavior that's not readily apparent to outside to the public. So I do think the SEC should look, but to this point, I've seen very little that would meet a test for manipulation, which generally involves false or deceptive behavior.
Thank you. I appreciate that. Mr. Tev, I thought of another question for you. Would a securities transaction tax be beneficial to retail investors in the United States?
Thank you, Congressman. I don't believe it would.
Thank you.
Gentleman's time has expired.
Thank you, Madam Chair. You're back.
Witnesses, we will take a short recess. The committee stands in recess for 5 minutes. Thank you.
Yo, guys. What do you think of that, chat? What do you guys think of Vlad? If you guys think Robinhood should pay back any funds lost to retail investors from Gamestop, hit the like button. All right, we're on our 5-minute recess here. Let's take a look and see what's going on, what we've missed here. Sundial down to $1.56 a share. Blood red across the market. Take a look and see what's going on in the main arena here. Okay, actually broader market's turning up slightly. Dow's only down 0.3%, S&P down 0.4%, and the NASDAQ 0.7%. Looks like it's just the watch list that's bloody. Sundial and Tilray both down on the day. Dude, put on some Wolf of Wall Street music. Yeah, I'll get copyrighted real quick for that stuff. We can use this live presentation as fair use. Yes, you did hear the pupper. That's Woo Woo. We're going to put Woo Woo on live toy unwrapping later. We had a super chat come through that bought Woo a new pupper toy. And so that'll be on later after the hearing. Free market or not, let people trade what they want to trade. I completely agree, guys. Yeah. What I want to know is who yelled at the Citadel banker. Who are you and why are you here? That's what Woo wants to know. Who is talking? Chris, welcome to the channel. This is our live stock market commentary. We do this every day, 9 to 4 Eastern Time. We talk about stonks, discuss the current news. So I don't believe this hearing will have that much of an effect in the immediate term. I think as we hear about what changes are going to happen to legislation, that's when we'll start to see the effect. I haven't quite processed the entire situation yet, but I'm sure by the evening I will have it processed. I was a little busy watching you guys in the chat and being entertained there. Smith, yeah, we can have music that's not copyrighted. You guys text me any non-copyright music that you want to. My number, I keep my number up on the screen, and we will consider it. Man, I will subscribe. I want to learn. Right on. Subscribe. And also join the Discord, guy. We have an entire education center in there, as well as a supportive community that's focused on helping new people learn how to trade. Woo Woo will be doing stock advice. He's bullish milk bones and dog treats right now. Of course, the pet industry is growing massively. You guys saw that Petco was recently listed as WOOF, W-O-F-F, and changing the way their business works into more pet health. W-O-O-F, WOOF.
Madam Chair, Mr. Gill, let's start with you since
Yeah, WOOF.
you seem to have started all of this. You began analyzing Gamestop.
You guys want to see more of the Easter Island guy? Boy, there was some pretty good memes flying through the Discord there. The Discord is kind of like YouTube, except for you can use memes, you can curse, you can get a little bit more wild in the Discord. Also, a lot of educational areas in the Discord. We keep individual stock rooms with due diligence from the entire community in the Discord.
Sure. At the time, I thought that the value of the business could be worth up to roughly.
Oh, you want to play the Lindsay spot? No problem. All right, yeah, we'll put Lindsay on for a second.
Bring it back to you bought it 5, you thought it was worth 10, 20?
I felt as though that it could be worth at the time in the range of say $20 to $25 per share.
Okay. And you continued to invest on and off through 2019 and 2020. Is that true?
Yes.
Okay. And you also you bought some shares, but you also did some options trading, did you not?
Correct, I did.
And options trading is not really for the novice investor, is it?
It is. It is a riskier investment. Yes.
Okay. On January 27th, I think the stock price hit $483 or something like that. Is that true?
I believe it was in that area. Yes.
In your analysis, back when you started investing in the stock, did you ever see it being valued at $483 per share?
At the time, I thought it was possible, but a very low probability, I thought.
Okay, thank you. Just a couple more questions. In terms of the platforms where you visited and discussed this stock with others, one was the Reddit subreddit Wall Street Bets platform, correct?
Correct.
And at any given time, how many people were you talking to on that platform?
I wasn't so much talking to anyone individually, but rather making posts on that public forum.
That GameStop was an attractive stock.
Yeah, early on, I had felt that it was an attractive investment opportunity, and I had shared some of my thoughts as to why that was.
Did you discuss this on any other platforms? Are there any other kinds of Reddit or other kinds of platforms that you talked about the stock?
Yes, I have talked about the stock on some other platforms.
Okay. Did you ever talk about the short sellers that had bet against this company?
Yes, the topic did come up.
And about when did that occur?
Oh, since around the time I had begun investing in it, it was, as someone else has noted, it was an exceptional level of short interest in the stock since the time I had started investing in it.
Okay. Let me turn my attention now to you, Mr. Plotkin. When did Melvin first take a short position in GameStop?
Thank you, Congressman. That was in 2014, really right at our inception of the fund.
And when you did that, did you continue to maintain a short position?
That's correct.
So you said you analyzed the value of the stock, and you, by taking a short position, you, unlike Mr. Gill, thought that the stock was overpriced. He thought it was underpriced. You thought it was overpriced.
That's a good conclusion. Yes.
Okay. In your analysis, when you started into the short position, what did you think the stock was worth?
I don't remember exactly at the time. I think when we launched, it was probably a $40 stock. I think we believe the company had a lot of structural challenges. We've seen their earnings go from, I think, north of $3 a share. It's almost negative $3 a share. So there's been a lot of challenges fundamentally.
All right. Last question for you. Were you in a naked position in your short position because the stock was oversold?
No, our systems won't even allow that. So that would be impossible for us to do.
Okay. Well, thank you. My time's expired. I wanted to get some facts out for Mr. McHenry, and I yield back.
Thank you very much. The gentleman's time has expired. Mr. Emmer?
Thank you.
Nice for 5 minutes.
Thank you, Madam Chair, Ranking Member McHenry, for holding this hearing. Thank you to the witnesses for being here today. I represent the 1st Congressional District of New York, which encompasses much of Suffolk County on Long Island. My home district is full of people from all different walks of life and industries, and having access to cost-efficient investing is crucial. While there are always ways to make a system work better, our capital markets are the envy of the world with their liquidity and diversity of investment opportunities. Innovations in securities trading brought by the private sector have increased access for retail investors. For better or for worse, and this situation is a perfect example. For example, one of our witnesses here, Mr. Gill, or should I say Roaring Kitty, turned $53,000 into almost $50 million, and that's what you would call some deep you-know-what value. Of course, we know that not all those who invested in these stocks share the same success story. However, I want to highlight a potential vulnerability in these innovations. I've been concerned for some time in general with the sharing of U.S. individual user data with the Chinese Communist Party. I sent a letter, for example, to the Treasury Department in October 2019 expressing concern with the potential sharing of user information by TikTok to its parent company ByteDance and asked for a CFIUS review. Chinese companies are required by law to regulate online behavior that deviates from the political goals of the CCP, obey the CCP's censorship directives, and participate in China's espionage. These policies regulate companies like TikTok in the China market and increasingly their overseas business. Webull and Moomoo are two examples of broker-dealers that are subsidiaries of Chinese parent companies. According to Bloomberg, funds affiliated with Xiaomi Corp own at least 14% of Webull. Xiaomi is a Chinese company that risks being delisted from U.S. exchanges after the U.S. Department of Defense put the company on a blacklist on January 14, 2021. Moomoo is owned by Futu Holdings, which is a company that received a significant investment from entities affiliated with Tencent, a company with known ties to the CCP. On December 8, 2020, Bloomberg Businessweek ran an article on Webull stating the company, quote, has increased its roster of brokerage clients by about tenfold this year to more than 2 million by offering free stock trades with a slick online interface. On January 29, 2020, the day after trading activity for long trades on certain stocks discussed on Reddit threads were limited, Bloomberg ran an article with the headline, Robinhood rival Webull sees 16-fold jump in new trading accounts. It's clear that these apps have rapidly increased their user base, which has me concerned. Ms. Schulp, do you think we should be concerned about the potential for Chinese entities with ties to the CCP receiving personally identifiable information or other user data from their subsidiary broker-dealers that are licensed and registered in the U.S.?
I think it's a potential national security concern, which is a bit outside of my area of expertise. What I can say is that the rules that the brokers have to apply and comply with regarding personally identifiable information and other material data should be applied equally to companies that are based offshore and companies that are based onshore. And I hope that that's the case with respect to Webull or any other competitors that are not domestically owned.
Having a diversity of choice for different trading apps is generally good for market competition. However, is it a good outcome for millions of Americans to flood into trading apps that could be required to share user data to parent companies that have ties to the CCP?
Again, I think choice is key here, as well as understanding from a consumer perspective what companies you are choosing to do business with. Again, the national security concerns are a bit outside of my area of expertise.
Well, I thank you for being here. This is another angle to this issue with these new options that are being provided to average retail investors. And we want these retail investors to have the most amount of information as possible to be set up for success. I yield back.
Thank you very much. Mr. Himes, you are recognized for 5 minutes.
Thank you, Madam Chair, and a big thank you to our panel today for a very interesting conversation. One of the chairwoman's ways of characterizing this hearing was who wins and who loses. And I've spent a bunch of time in the last couple of days looking at the various players here. I'm pretty convinced that the wholesalers, Citadel is one of the winners. They make a lot of money. They're the casino in this story, and the casino tends to win over time. Robinhood has a valuation of $5.6 billion and makes a lot of money from the casino. So who loses? And I want to spend some time talking about the person who usually loses, and that's the retail investor. And while I have supported for many years the democratization of finance, as we say, it's not just in Washington, D.C., but on Wall Street. The retail investor is known as dumb money. And there are any number of structures that are set up to take advantage of the retail investor. And I think it's worth looking at that, because as much as we're celebrating Mr. Gill here, we're not talking very much about Mr. Salvador Vergara, who was featured in a Wall Street Journal story, who took out a $20,000 personal loan through Robinhood, invested it in GameStop, only to see the value of his position go down 80%. So Mr. Vergara is out $16,000 he doesn't have, that he owes to somebody else. And as much as I support the democratization of finance, we need to be thoughtful about this. So Mr. Tenev, my question is for you. You quoted a $35 billion number as what I interpreted to be profits in excess of deposited funds and securities. If you just look at your customers who traded in GameStop over the period of its increase and subsequent decrease, Mr. Tenev, how did your customers in the aggregate do? Did they win or did they lose?
Thank you, Congressman, for that question. I don't have that particular cut of the data top of mind, so maybe we can get back to you on that one.
All right, you don't have that. So you do have a $35 billion figure. The figure doesn't mean a lot to me because it's just a dollar number. Help me convert that to a rate of return. First of all, is that $35 billion, is that gross or net? In other words, is that actual profit or does it include margin shares, other forms of leverage that may actually not belong to the account holder?
It does include, Congressman, unrealized gains. So it's the value of assets, both including positions in securities and cryptocurrencies.
Okay, I get that. I get that. But again, 35 billion doesn't mean anything to me unless you can convert that into a rate of return. So do that for me. What is that on what asset under management number is that 35 billion unrealized against?
The asset under management number is not one that Robinhood has publicly shared.
Okay, but you can't share $35 billion. Sorry, Mr. Tenev, I just don't have a lot of time. $35 billion is a meaningless number. I need to know what that is in terms of return. So convert that for me into rate of return. So I can compare it to Treasury, so I can compare it to the S&P 500.
Congressman, with respect, I think the proper comparison is to customers not investing at all. Much of our customers are investing for the first time and are taking money that they otherwise would have spent or consumed and putting it in
Mr. Tenev, again, I don't want to be rude, but it's my time. Again, you offered up the $35 billion number, which, as you and anybody else schooled in finance knows, is meaningless unless you convert it into a rate of return. So just please convert that $35 billion number, which to the folks watching at home sounds like a lot of money. But what does that actually convert to in terms of rate of return, which is what matters?
Congressman, $35 billion is indeed a large amount of money, especially for our customers who are mostly small investors. It's more than most corporations, nearly all corporations have paid.
Mr. Tenev, again, don't make me be rude here. You and I both know that $35 billion of unrealized gains, if that's on a base of $100 billion, that's a 35% of return. If that's under $1 trillion, it's a radically different rate of return. So what I'm trying to get at, Mr. Tenev, here is you threw out the number of $35 billion. I actually think the right comparison is, what if your clients had simply invested in the long run in an S&P index fund, would that number be more than $35 billion or less?
Congressman, with respect, I don't believe the right comparison is investing in an S&P index fund. I think the right comparison is not having invested at all and having instead spent that money and consumed it.
No, it's most certainly not. It's most certainly not, Mr. Teneth. And so I'm going to ask you, I'm out of time, but again, you put out the $35 billion number. So I think it's only decent, because you and I both know that a hard dollar number is meaningless unless you can convert it to return. So I'm going to ask you to convert that, obviously I'm out of time, into a rate of return for us.
You're out of time. Mr. Laudermilk, you now recognized for 5 minutes.
Thank you, Madam Chair, and I appreciate all the members of the panel being here. I think you've seen that there are occasions with some on the committee here that if you're not giving them the answer that they want, that they can use, they're just going to continue to push on you. And I just encourage you to continue speaking the truth, and you'll always stand up head and shoulders above everyone. Not surprisingly, the situation with GameStop trading has resulted in commentators and even some of my colleagues engaging in knee-jerk reactions, calling for new laws and regulations to be hastily enacted. It just seems to be a trend in Washington, D.C. to never let a crisis go to waste. Some have even spread conspiracy theories and alleged that crimes were committed before knowing what even happened. I can even testify to what was just being said is I know numbers of people, personal friends who have never invested before, but because of Robinhood and other retail platforms, many of them took the stimulus money that they received during the CARES Act, which they were still working, they didn't need, and they actually started an account and started investing. So yes, more and more people who have never invested before are now investing using these platforms. This hearing is a reminder that with complex situations, we should take time to understand what actually did or did not happen, especially with this GameStop situation. Now, the SEC is the proper authority to determine if any rules were broken, and they are looking into it. Congress has already given the SEC broad authority to oversee the capital markets, and we do not need to rush to enact even more big government regulations until that could ultimately harm the investors. Now, question, Mr. Teneth, can you remind us again why Robinhood temporarily paused trading of GameStop and other stocks?
Of course, thank you, Congressman. Robinhood paused trading temporarily, or I should say paused buying of about 13 securities on Thursday so that we could meet our regulatory deposit and collateral requirements.
Okay, so what you're saying is you were paused because you had to comply with regulations. Is that true?
Correct.
All right, so it's ironic that the people who are criticizing brokerage firms because they pause trading, which they sometimes have to do to comply with regulations, these same folks are now saying, we need to respond to this with more regulations. I would say if people don't like brokers occasionally having to pause trading, I'd suggest they look at the regulations that required it. At some point, we need to recognize that piling on more and more regulations only increases complexity and does not help investors. Question for Ms. Schultz. Despite the volatility and the frenzy of media and social media activity, it seems to me like the markets functioned as they were supposed to during this situation, and that markets are not broken. In fact, they are working well. Do you agree with that?
I agree with that.
Okay, thank you. I appreciate that. I think most reasonable people that are listening to this would agree that there are regulations in place. The SEC has those to pause activities that could be harmful, not only to the markets, but to the individual investors. And so what I'm understanding you saying is that it did work in the way it was supposed to.
As the facts that I know now, it does appear to have worked the way it was supposed to. This is not a sign to me that the market is broken.
Thank you. Mr. Griffin, what are some of the issues that policymakers should consider in the T+2, T+1, T+0 debate? Obviously, margin requirements exist to make sure firms have enough capital to settle transactions, but faster settlement and lower margin requirements can be positive for the retail investors, and we need to balance those needs. Can you address what some of the issues are in the T2, T1, and T0 debate?
So, Congressman, I cannot profess to be an expert on these issues, but I will give you my perspectives from having been in the industry for 30 years. We started at T5. We will one day be at real-time settlement. And the question is how long does that journey take? From T2 to T1, which reduces the amount of capital required by broker-dealers to meet the needs of their customers, that reduction in capital will be meaningful, would have been very helpful to Robinhood during this period of time. Reduces counterparty risk holistically, which is good for everybody in the market. We should push for T1. As we go to same-day settlement, you now bring into question the complexity of intraday cash movement, and you bring into play the necessity for all systems to be functioning every moment of every day with no room for error. On a T1 settlement cycle,
Time has expired. Let me remind the members that we're going to have a series of hearings. Today is the first. There will be probably two more. I didn't hear anyone here today say that they were ready to pile on regulations. So let's make sure we know that our statements are accurate. Mr. Foster, you're recognized for 5 minutes.
Thank you, Madam Chair, and to our witnesses. Mr. Tenov, I'd like to follow up a little bit on payment for order flow and best order execution issues. Democratization of finance is a good and noble goal, but for democracy to work, consumers need transparency and high quality information, and not only about fees, but about order execution quality. Your customers actually don't care directly about who you subcontract order execution to or any payment for order flow, but they need a simple way to compare the execution quality between your app and competing apps or other accounts. And while institutional investors can afford to run their own tests, and they do, and I'm sure Mr. Griffin is normally is quite often on the receiving end of those tests and trying to measure up to his competitors to compete for market share there. The institutional investors have the market power to demand best execution statistics for their prime brokers. And everyday investors do not get the same transparency. In fact, I believe there's an SEC rule 606 that requires brokers to disclose at least some order execution data to institutional investors, but this requirement does not apply to retail investors. So, Mr. Tenov, since Robinhood's mission is to democratize finance for all, I ask, what are the mechanisms that you would accept and support to provide transparent order execution quality statistics so that your customers can engage in a clean apples to apples comparison between other brokers, between your app and other people's apps in terms of the total cost of trading?
Thank you, Congressman, for that very important question. I'm generally in favor of a greater amount of transparency than what we've typically seen in the financial industry. And recently, Robinhood and me personally have engaged publicly on the topic of payment for order flow, short selling, and of course, T+2 and real-time settlement. We do publish 606s.
All right, I'm back. I think I missed a lot of stuff.
That detail our payment for order flow arrangements with various market
Still going at it, huh?
And
That's crazy.
just this past year, the industry implemented more detailed 606 requirements, which we of course conform to. Also, back in December of 2020, we released a public page on our website that provided detail about the execution quality, including price improvement that our customers received. And we're proud to announce in 2020, our customers received an aggregate over $1 billion of price improvement on their executions.
Right, but that's not a comparison to your competitors. There are a lot of questions about the accuracy of the best execution reference price. And independent of whether it should be improved, it seems like if I was a customer of you or one of your competitors, what I'd want to see is, I just executed a trade of $2,000 and on average, I got X% better or worse than a reference price. And then over time, and see not only the trade that I just executed, but perhaps a running average over the last month or two that you can compare to the running average of whether you're exceeding some benchmark for trade execution quality that can really be compared with potential competitors.
Damn, my eyes are hurt.
And is that a workable system? Are there difficulties? Is there a reason why industry should move that way in the name of transparency to customers?
Congressman, this is a very interesting topic to me. I'd love to have the conversation. I don't know if this is the right forum to necessarily ideate and brainstorm on all the solutions, but I just want to say I'd be happy to engage with this in a detailed forum and figure out the right path.
Okay, well, yeah, we do intend to continue to engage with the industry on this subject, because it's very easy to make payment for order flow sound really creepy. You're basically selling a list of rubes to the sharks. Okay, on the other hand, you make part of an argument that this can net out positive for consumers, but for it to fully net out positive, they have to be able to make the apples to apples comparison. And so that's, I think really an important issue. And I think that probably your reaction to that, if you found your customers were leaving you because of poor execution quality, you would do what large funds do, which is
Buddy, bro, what you doing there, bro?
Between multiple order.
Yeah, you humping my socks, bro?
And
Yo, whoa, buddy, bro.
The best order execution and move your business to whoever does the best for your customers.
Yes, well, Congressman, we already do that. We have 7.
Mr. Mooney, you're recognized for 5 minutes.
Thank you, Madam Chairwoman. So let me just start by saying the last Congress, 30 of my Democrat colleagues, 4 of whom on this very committee, co-sponsored a bill that would impose a tax on the purchase of securities and certain derivatives. And just recently, after the market volatility surrounding Gamestop in January, Democrats renewed the call, many Democrats anyway, renewed the call for a financial transaction tax. On just January 28th, Congresswoman Ileana Omar tweeted, "How about this, financial transaction tax now?" Congressman Peter DeFazio is the lead sponsor of the bill. He's already put the bill back in for this session of Congress. It's now House Resolution 328 of 2000. So it's called the Wall Street Tax Act of 2021. I actually have a copy of it from the last session here. He says, Congressman DeFazio says that a financial transaction tax would, quote, help.
It seems like we're going up, though. The Dogecoin's going up, so we good, bro. Just gotta hold. If you don't have Dogecoin right now, buy some. Like every pandemic, bro, the currency always changes. There's always new ones coming out. You catch it early, bro. Like you'll be banking. It's just, I think it's based on like you catch it early and stuff. Long term is the real winner, though.
Affect your platform and the retail investors that are your customers.
Damn.
Thank you, Congressman, and we'd be happy to engage in this discussion much more in the future. A 10 basis point financial transaction tax would eat into the returns of our customers, which, as you pointed out, are largely smaller investors. And in that sense, it would be a cost to the retail investor. Of course, that would have to be weighed against the potential benefits of this tax. And I know it's a more complicated issue than meets the eye at first glance.
Okay, well, thank you for that answer. My next question is actually for Jennifer Schlupp. I know you spent your career specializing in financial regulation. In your expert opinion, would a financial transaction tax directly prevent fraud or market manipulation?
No, I don't think a financial transaction tax would have an effect on fraud or manipulation. I also don't think that it ultimately, financial transaction taxes often fail to raise money, and they distort trading in a way that's not necessarily foreseen initially by the tax. And I'd like to just add in there as well that financial transaction taxes, while they initially might seem like a small imposition on an individual investor, those taxes often hurt individual investors and their long-term retirement goals by affecting the institutions that also do the trading in mutual funds and with retirement money. I don't think a financial transaction tax is a good idea.
And a quick follow-up to that, Mr. Slough, what do you think a financial transaction tax would have done anything to prevent the market volatility and disruption we saw just this past January?
No, I don't think it's related here. There's been some discussion that it might have decreased the amount of trading and thus changed the volatility. It's not my opinion that would have had any effect on this particular circumstance.
Thank you. I only have a minute left, so let me just summarize. The financial transaction tax, supported by many Democrats, would do nothing to prevent market manipulation or fraud, would have not prevented the market disruption, and most importantly, would hurt retail investors. Yet Democrats are claiming that the events surrounding GameStop and Robinhood in January make it imperative to implement this financial transaction tax. It just doesn't add up. A financial transaction tax would make it more expensive for small retail investors to trade. So much for looking out for Main Street. I believe we should be working together to find ways to open up markets to retail investors, not close them. Instead of making trade more expensive with a burdensome tax, let's look for ways to empower retail traders. Thank you, Madam Chair. I yield back.
Thank you very much. Ms. Beatty, you're recognized for 5 minutes. Ms. Beatty?
Thank you, Madam Chairperson, and thank you to the witnesses. My first question is to the CEO, President Ken Griffin. In the first 3 quarters of 2020, your company paid online brokerages like Robinhood $700 million for their order flow. Do you believe that brokers like Robinhood can serve as the best interest of their users while selling their order flow to companies like yours?
Oh my god, man. Facebook got me tripping.
We give a better price, a better execution for American retail investors.
So I'm going to take that as a yes, since you said they'll go further. Then can you tell me why did your company urge the SEC to ban payment for order flow models in a filed SEC?
Damn. Damn, why you interrupted them, bro? I want to hear that shit. Nah, they're trying to conceal something. Holy cow.
Thank you, Congresswoman, for that very important question. There's several reasons that may be the case. One important one is that our model and formula for payment for order flow works a little bit differently. We actually receive payment for order flow as a percentage of the bid-ask spread rather than on a per share basis. We believe that that's the most optimal structure of payment for order flow solutions.
Motherfucker said no. Bruh. Yo, what's up with my thing, bruh? Supply. There you go. Hold up.
market infrastructure would guarantee an investor could retain custody of their shares so that the shares can't be lent to short sellers, there could be a downside. How do you feel that only one claim on the shares would resolve this? And that relates to proxy voting as well, or shareholders voting the shares.
Congressman, I believe that that's an important question. It's one that Robinhood and me personally have engaged with. I do believe that the ability for the same share to be shorted an indefinite number of times is somewhat of a pathology, and that should be fixed. And I think step one of that is modernizing the antiquated settlement infrastructure that everything is built on. We simply don't have the ability to properly track what shares have been shorted and how many times as they're moving through our settlement system currently.
Yeah, thank you for that. And I appreciate that you see the relationship. Hopefully, broadly we do, and we provide that nudge the market needs. I want to commend Vice Chancellor Travis Laster of the Delaware Chancellery Court for his letter and paper, The Blockchain Plunger, which explains how this could be done. And I ask unanimous consent to submit that to the record. As my time expires, I want to commend you, Mr. Gill, for just representing a large segment of the industry, in my view, where savvy investors have had an opportunity to engage. And it relates to people with diamond hands that hold. So you might not call yourself a holder, you might use the word diamond hands, but thanks and congratulations for your success.
The gentleman's time has expired, and without objection, your submission is taken. Thank you. Mr. Vargas, you're ready.
Thank you very
minutes.
Thank you very much, Madam Chair. First of all, I want to apologize to Mr. Plotkin. You spoke of the anti-Semitic attacks that you suffered online, and as a person of color, I always feel the need to confront hate speech and speak out. And I don't think there's ever been a more hateful, evil, sinful event in human history than the Holocaust. So I want to apologize to you and your family for those attacks. You brought it up, and I think we owe you an apology. I want to apologize for that. Sometimes I think some of my colleagues on the other side of the aisle are devoid of any contact with real people when they say this is just political theater, or they don't want to know the rate of return when that's exactly what people want to know. In fact, there's been a great deal of interest in this hearing, and I think it's because there's great distrust in our society and in government, markets, institutions. And then along comes the story of Gamestop. And it's a story really of Robinhood turned on its head. And the reason I say that is Mr. Zuckermeyer brought it up. Robinhood is an English folk hero, 13th, 14th century. And he was supposed to steal, Robin of Lockley was supposed to steal from the rich and give to the poor. And here you almost have the opposite. You have the situation where you have the steal from the small retail investor and giving it the large institutional investor. From an outsider's perspective, you have the bullies, the hedge funds, and their armies of analysts and lawyers and regular old suits attacking the trust GameStop by shorting its stock. And then to the rescue, here comes the retail investors, and they're taking stock to these incredible levels. And all of a sudden, Robinhood steps in, but not to help the little guy. He steps in and says,
Hey, there you go. Bingo. Get him, bro. That's what happened. That's what happened. Yeah. I'm fucking lying, bro. Yo, that guy is lying. Ooh, look at him. Someone that doesn't lie, I guess they will say it genuinely, saying like, no, we did not do none of something like that. But he said it, no. That's it. Like, shit, if I wanted to lie like that, I would say no. Just get rid of it and just go on. Yeah, watch this. This is pretty educational. Fuck, I'm still bullish, man. I'm not selling. Fuck you guys. Diamond hands, baby! What's that, better bird? What's wrong with your punk ass, bro? Hmm? Oh! Oh! Better bird, come down, bro. And we're grateful for it. That doesn't mean you get to cheat us. Just because you give us crumbs doesn't mean you get to dictate the game, bro.
stock fell back to earth. Not every investor lost money, and Mr. Gill, sitting before us here today, remains bullish on the stock. Still, Bloomberg reported yesterday that he was served a lawsuit accusing him of misrepresenting himself and his motivations. I'm not here today to take sides in the litigation. However, it does raise important questions about the role of social media websites like Reddit, especially in the context of volatility we experienced with GameStop, AMC, and numerous other stocks last month. Mr. Huffman, what kind of authentication exists for Reddit users to confirm their identities, to verify that are even real people?
Reddit, and this is an important quality of Reddit, so thank you for the question, doesn't require people to reveal their full identity to use the platform. One of our pillars of privacy, and privacy is something that's critically important to us, is that users should be masters of their own identity, and they can choose to reveal as little or as much as they would like. I'll point out that there are two sides of this that are really important. On one side, this allows Reddit to work. Something like Wall Street Bets would not exist if users had to reveal their full identity, because in Wall Street Bets, people are revealing gains and losses. They're effectively revealing their financial position in life, and we would not put that burden on anybody to force them to do so. I'll also point out that other platforms have real identity, and it doesn't do anything to improve their behavior.
Can I ask a question of that? Is there any way for a regular user of Wall Street Bets subreddit to know what content is genuine, written by other users just like themselves, retail investors who are looking for honest information to invest on? Is there any way for that?
So there are a couple aspects to this. So the first is that we as a company invest significant resources in enforcing the veracity of our voting system. It's something we've been doing for 15 years, long before events like this, long before even the election and the politics of the last few years, where these things have become top of mind for everybody. This has been critically important to us. Also, our user base is exceptionally good at sniffing out untruths, misinformation, fake stories, both within this community and Reddit at large. And so in order for any piece of content to be successful on Reddit, it has to be accepted by that community and receive the same votes that anything else would.
Do you have any heightened standards for places like Wall Street Bets or other investing subreddits where moderators are able to manipulate content to their own financial gains?
We keep a high standard across the entire site. And in with this particular community over the past few weeks, we've been looking especially closely, anticipating these sorts of issues and questions. And to date, we have not found any nefarious behavior.
Got it. But we could have a situation where thousands, possibly millions of dollars of retail investor money may be being manipulated, right? We don't know that.
People in the United States talk about stocks on Reddit. They talk about it on TV, in magazines. People can say, in fact, they do on television all the time, encourage people to make what I would call bad investment decisions. On Reddit, I think the investment advice is actually probably among the best because it has to be accepted by many thousands of people before getting that sort of visibility.
Do you see any difference between someone on Reddit offering advice versus an analyst at a major bank or a financial services firm?
Absolutely. I think on Reddit, you're seeing retail investors who are giving authentic advice based on their knowledge, and you would not, call into question what their motivations are or what large positions they may hold before going on TV and talking about them.
Do you plan to do more in this space, and is this something that's going to be a major priority of yours? And do you think overall social media companies like yourselves should be held to a different standard? Should you be responsible for what happens in your content? Should someone manipulates something, or if it's a bot, should that be on you, or do you think that's just buyer beware?
We take manipulation of Reddit incredibly seriously. That is one of our, first duties in all of this is to ensure the authenticity of our communities. Yes.
But do you think you should be held responsible if somebody posts something, if there's some collusion, or if there's somebody who it's a bot that's online? Do you think you should be on the line, or this is just a site you offer for people to exchange ideas?
Reddit can be held responsible, and we do take our responsibilities here incredibly seriously.
Thank you. The gentleman's time has expired.
Thank you. Thank you, Madam Chairman.
Mr. Kustoff, you're here.
Thank you, Madam Chair, and I want to thank you and the ranking member for convening today's hearing. If I could, Mr. Tenev, I'd like to echo what many of my colleagues have said today. We do appreciate the fact that
say we misjudged our capital requirements. This was a 1 in 3.5 million occurrence event, one that had never been seen before in capital markets. And we had to play this by the book. Robinhood Securities made the decision that we did so that we could remain in compliance with our regulatory capital and deposit requirements. Unfortunately, it required us to restrict the buying of these securities for Thursday and limit it to some degree on subsequent days until additional capital came in that allowed us to relax the restrictions.
It was Robinhood's mistake, though, correct?
Well, Robinhood owns what happened, certainly, and we need to make sure that it doesn't happen again. But Robinhood Securities had limited options with how to address this, and I fully support the team in making the decision that they did, and I believe they did the right thing and the only thing.
I realize you said at the beginning that you're privately held. With that said, is your primary source of revenue from the order flow payments that you receive from some of the players that we've talked about today?
That is correct, Congressman. Payment for order flow is one of our largest revenue sources.
Is it the largest?
It's the largest, yes.
Now, in your testimony, in your written testimony, oral testimony, you talked about the settlement period and what we're probably capable of doing in real time, or instead of T+2, maybe the T+1. If we had real-time settlement, would the situation that did occur in January, would that have been preventable? In other words, that wouldn't have happened if we had real-time settlement?
Congressman, if we were to have real-time settlement, and of course there's some implementation details that would govern this, there would be less of a need for collateral at clearinghouses because the cash and securities transactions would be exchanged in real time. So collateral for counterparty risk would be less necessary. So real-time settlement would lead to reduction, perhaps an elimination in some of these collateral requirements, a reduction in the money that's sort of clogging up the plumbing of the system, and that would have avoided some of these problems altogether.
Thank you very much. And just to be clear, does the same answer apply if I asked you if settlement was T+1 instead of same-day settlement? Would your answer be the same?
Congressman, T+1 certainly would be better, but it doesn't. It reduces the scope of the problem. It doesn't eliminate it from a technology standpoint.
Thank you very much. Mr. Huffman, if I could, I'd like to follow up on some of the questioning that my colleagues, Congressman Hill and Congressman Gottheimer, asked. You've done an investigation into Reddit, into Wall Street bets. You don't see any bad actors. I'm paraphrasing, but you don't see any bad actors that caused any role in the GameStop frenzy. Am I characterizing that correctly?
Congressman, that's right.
You know that Congress is looking at amending Section 230. What are your thoughts about that as it relates to Reddit?
Sure. So Section 230, I think, is a critically important law to the internet as we know it. And it was created, in fact, to protect a forum in the early internet for talking about stocks. Section 230, I think it's also important to point out, doesn't protect platforms or companies like ours from civil litigation. So there are mechanisms for coming after companies like ours. What it does protect is our ability to evolve the way we moderate our content, and in which we have done in many ways over the last decade.
The gentleman's time has expired. Mr. Gonzalez, you're recognized for 5 minutes.
Thank you, Mr. Speaker and Ranking Member, and I want to thank everyone in the committee here with us today. This is for Citadel. Mr. Griffin, in 2020, Citadel violated regulation, SHO, which governs short selling. Citadel is now involved in another short selling problem, and Robinhood routes half of its customers' orders to you. Robinhood halts buying on a position that you're long on, and you own the hedge fund and the clearing broker. What is there to prevent you from taking advantage of that situation and making sure you profit off the confusion and retail investors?
Congressman, I'm trying to understand the question.
Let me give it to you again. In 2020, Citadel violated regulation SHO, which governs short selling. Citadel is now involved in another short selling problem, and Robinhood routes half of its customers to you, orders to you. Robinhood halts buying on a position that you're long on, and you own the hedge fund and the clearing broker. What is there to prevent you from taking advantage of that situation and making sure you profit off the confusion of retail investors?
So in no particular order, I just do not understand the reference to us owning a clearing broker. We do not own DTCC. We do not control DTCC. We are not party to the discussion, dialogue, or demands between DTCC and Robinhood. So I do not understand the premise of the question, because we have literally nothing to do with DTCC other than being a member of DTCC for providing settlement services for us and for doing real-time trade affirmation and clearing. Now, Citadel Securities owes a duty of best execution for every order that comes from Robinhood. And I will tell you that I'm incredibly proud of how seriously my team takes that duty of best execution. Some of the most earnest, hardworking, and thoughtful people that I've ever met in my life work on our retail execution business here at Citadel and take great pride in the execution quality that we give to each and every trader, not only at Robinhood, but at every single one of the retail.
Thank you for your response, Mr. Gill. But I understand that you made your position known on Gamestop as far back as 2019 and are lauded as a diamond hands hero by Wall Street Bets community. Have you ever previously experienced or observed the type of restrictions Robinhood and other applications performed on January 28th?
Thank you, Congressman. No, I have not.
Thank you. That's a good question. And Mr. Huffman, I'm not a Redditor, but I do understand the problems around social media and freedom of speech and the tightrope act that goes on where these intersect. In the near decade of Wall Street Bets and subreddit, have they shown themselves to be exceptionally problematic, an exceptionally problematic forum, or just one of the many eccentric communities that call Reddit home?
Congressman, I think your latter description is more accurate. They are an eccentric community, but they're well within the bounds of our content policy. And though we do have difficult decisions to make here and there regarding specific communities, one of the things we look to first is whether the community is trying and they're putting their best efforts to be a good citizen of Reddit. And towards that end, we've had consistent communication with the moderators of that community, and they've been doing, I think, an excellent job.
Thank you. Well, the last financial crisis was caused when we turned a blind eye to the bad practices of our financial institutions. Perhaps today we've seen a warning about the clearing process, and I hope today can be a jumping off point for us to take a hard look at our markets and the practices of these institutions. In a two-day clearing process, the liability risk and potential financial stress limited trading, but in a key time in market and perhaps in a way that materially affected investors in these recent events. So I'm hoping that we all get to take a closer look at what is happening. And with that, I yield back. Thank you.
Thank you very much. Next on our list, we will have Mr. Hollingsworth for 5 minutes.
Thank you, Madam Chairwoman. Mr. Griffin, I'm going to direct my questions to you specifically, but I'm hoping to talk a little more philosophically about the market writ large rather than just Citadel itself. Certainly, there's been a significant amount of evidence supporting the advantages market makers offer retail investors. Through sophisticated infrastructure and high-speed technology, bid-ask spreads have decreased from 33 cents to less than a penny over the last 5 decades. And according to some research, saved retail investors $1.6 billion just in the first first 6 months of last year alone. None of our discussion after this and the questions I'm going to ask are intended to be pejorative to that reality, but I just wanted to pick your brain, given your deep experience, about some of the implications of off-exchange trading specifically. We've seen this year that off-exchange trading has eclipsed nearly 50% of all trading. Can you talk a little bit about what factors have contributed to off-exchange trading's growth versus on-exchange trading? Certainly, I want to talk about the concerns we may have as market participants about that. But first, just the factors that you think are driving that. I think one of the most significant drivers of off-exchange trading is that exchanges are handcuffed in their ability to fulsomely compete. Can you talk a little bit more about that? Is this just regulatory arbitrage? It is. I hate the word because it has a negative connotation. I believe that the exchanges should have greater latitude in setting their tick sizes in the most liquid securities. Mm-hmm. That will allow order flow that's currently going to dark pools to go to exchanges and to receive better executions. So let me just be very clear. It's not that we want to inhibit dark pools or market makers like Citadel from competing. It's right. That we want to enable and empower exchanges to be better competitors. I started my career as a retail investor in the day where I used to spend 25 cents in a bid-ask spread if I was lucky. I know the days you're referring to. We've come a long ways, but to continue on this journey, the next step is to allow exchanges to be more competitive in the market. Well, so I think you answered this question, but just to put a fine point on it, there is public policy work that needs to be done in order to help resolve some of this challenge that exists in the movement of volume from on-exchange to off-exchange. That's incumbent upon us, it's incumbent upon regulators to find a better solution. Is that what you're saying? Congressman, I'm saying that yes, it's legislators or the SEC. I believe much of this can be done by the SEC as a policy matter. Right. Think of it as the next step forward in regulation NMS. Love it. Great. Thank you for all those answers. Just, I want to highlight this further. Can you talk about some of the challenges or deleterious impacts on the market if more and more volume is off exchange versus lit trading? Can you talk a little bit about why we should be concerned about that to make sure we all understand how important it is to make these changes to empower, as you said, exchanges to be better competitors? I think there are three salient points I'd like to make. First, price discovery is the most important part of our capital markets function because price discovery combined with liquidity fuels our free enterprise system. It's how companies raise capital. It drives down the cost.
What's the difference between your lawn and a true green lawn?
All right, yo. I'll be on later. I gotta do my daily